Everyone. So today what we're going to be looking at is we're going to be analyzing companies where there is fear and uncertainty from a broader spectrum of the market. And we're going to try to see if that is warranted as we trickle that down into just one company for one event. And that is earnings on Lennar. They report on March 14th after market close. So let's get right into it, guys. So this video is going to be pretty quick. So going through the scan, we've gone over this before. We're just looking for high implied versus average moves. We want to get a little option volume. That's what we have here. Found Lennar at 1.67, indicating also with a historical P&L of 182% selling straddles on this over recent quarters that this could be a very profitable trade. Looking at the backtest, we can see there's minimal volatility in terms of the actual performance of this, besides one blowout that we saw in 2021. So all of this sets up nice, but this is the big thing here. We can see why this is looking attractive. This implied move has risen drastically from around 4% at the beginning of the month to over 6% now. What this indicates is that we could be seeing fear. And the way that we can analyze if there is fear surrounding this thing is from a multitude of different ways. The first way that we can analyze if there's fear is if we go actually into the options chain in itself. Now, why would we be going into here? What could be in here? Well, what could be in here, guys, is actually some option statistics which show us that the put call ratio on Lennar is almost 4, right? So essentially, what I'm saying is that a lot of people could be betting up puts because they think that the earnings are going to be bad. The question is, why do people think the earnings are going to be bad? Why would investors be looking to hedge or speculators trying to make money from the downside? Well, guys, basically, I did a little research here on this topic, and it appears that most of it is coming from macro signals. And there's actually a point mentioned in this article that, you know, on Seeking Alpha, that basically the earnings don't show the headwinds that are coming. And that's funny to me because essentially earnings are a result of past performance, right? So if you're trying to say that, this rally in the implied move is driven by future performance for an event that is in the past, it doesn't make a lot of sense. That should be a great trade, assuming that they don't lower their guidance, that is. So what this could be is this could provide a really good opportunity, right? Looking at this, we can see historically this has been extremely profitable. The last thing I want to go over is who's making these bets? Who's making these bets? And the answer of who is making these bets is not retail for the most part. Retail is not talking about Lennar. They're not talking about Lennar earnings. As we can see here on Swaggy Stocks, there is no mention of Lennar, even though it's one of the larger home builders, and there's still no mention of their earnings. It appears that it's mostly fundamental investors, fundamental, standard investors. Maybe some of them are looking to hedge. Could they be price sensitive? Yes. Do they know the products? Not so much. And I'm referring to options there. That being said, with all this cultivated, it seems like the market is afraid of future outlooks for something that reports in the past, which could be a gigantic inefficiency, again, assuming that they do not lower guidance. Now, with all this being cultivated, structuring the trade, guys, pretty simple. Clear cut, nothing crazy, right? Straddles, gonna sell them at money. So in this case, that would be the 99s. And or actually, no, it would be the 100s. And what we're going to do is just, real quick, we're going to plug in our forecast balls. It's going to be around 43% of where it's currently trading at. And what we're going to see is that if we hit on these average moves, right, we're going to get some really good P&Ls here. We're going to get P&Ls of around 260 bucks. We have break evens. Currently, the straddle is trading for $6.55. So that's our break even upside downside for this week's expert. Now, obviously, guys, I always recommend doing additional research, especially in a case like this. I highly recommend that. But I do think that the driver of the rallying the implied move could be a little off from the fundamentals. So that's all now, guys. If you guys have any questions, feel free to message me.